Capital, to everyone in the room. So as I said, we have a really, really good panel, and we will have time to ask questions. And please, I have one comment and one question, just questions for that. So what we'll do is we'll speak a bit about funding the future. And the first question goes to you, Maxime. So every time we go to a summit, they all tell us that Africa has the fastest growing population, with 10 of the fastest growing cities between 2018 and 2025 being in Africa. Yet, in 2023, only 1.6% of global venture capital funding actually went to Africa. So surely if funding the future should be funding Africa, but the numbers don't say that. So I think, Maxime, the question is, why do you think it's only 1.6% in terms of funding African startups? And shouldn't the funding match, all the slides we see and graphs we see about how we are the youngest population in the world?
So very, very vast.
Let's maybe swap.
Is this working? Yeah. Very, very vast question. I think this is better. No?
You got the hardest question, so we want to hear it. And it's also just.
This works now? Better. Yeah. Thank you. Thank you, Namara. So very vast question, and I'm going to try to be a bit concise so that everyone gets time to speak. There's always been a lack of funding in Africa, and to answer that question, we need to be aware of where we're coming from, what has happened in the past 20 years. What is the starting point? The starting point is development banks investing mainly in financial institutions, mainly through and to project finance states. And that today, even though the amount of funding has continued to grow in Africa, that continues to be the segments and the sectors that get the most funding. So at the very top of the food chain, there are very few investors that actually invest in the long term in venture capital in Africa. Each of the development banks, and there are a few exceptions, there are some great programs, but the amounts that they put is marginal compared to what they put in Africa. And what they put in Africa is marginal compared to the needs that we have in Africa for a number of reasons. I mean, of course, there's the population growth, et cetera, but there's also GDP, et cetera. So there are different metrics that we can take, right? And so I think that's the starting point. And once we've said that, you realize that even the money that they put in equity, so instead of just giving you money that you have to repay back to them, actual equity, a lot of it, and most of it has been going to private equity. And private equity is not risk-taking. Private equity is not us. Private equity invests in profitable companies that return dividends or can return dividends and positive cash flows. It's not based on growth, and so it has a fundamentally different way of investing. And the mindset of all these major investors, and there are a number of them, the mindset is very private equity focused. It's not irrelevant to the discussion here today because in climate, there is actually a big need for CapEx. And so private equity players are great partners. And I think they need to be part of this discussion. Now, if we go to venture capital, why is it so little in Africa? In Africa, if you follow the life cycle of a company, when you get to seed stage, you need to have positive unit economics. So if you're a SaaS company, you can do that with your 3 developers, and you can try to prove an app is working, and you can try to show positive unit economics with relatively little capital. But if you're actually doing carbon capture, and you need to prove positive unit, that means you have to have several units to talk of unit economics. And so that's already several $100,000 or millions of dollars of investment. So before seed stage, you've already had that need of investment. And in Africa, there's literally no VC that does CapEx intensive investments. I think that the way we set up our fund is in practice to focus on these strategies, be it in climate or in other sectors. because it cuts across in Africa that if you use tech, you actually need to have the relays for that tech to be used. So if you create an app, you need your agents, you need your shops, you need antennas, you need whatever it is, but you're going to build it yourself. No one's going to do it for you. And I think that's very different from the rest of the world. So a few years ago, and I'll make it short, but a few years ago we saw a huge boom in VC, and that was great. It's a whole bunch of international money from a whole bunch of entrepreneurs from the US that gave a lot of money and a lot of hope to a lot of startups. Did they know that it was so hard to apply tech in Africa? I'm not sure. And I think today that money is kind of waiting to see what the next step is. And the next step is to get all these great models to a level of profitability and scalability, and to get them to the next level, and that next level could be private equity players. So that's where the bottleneck is today. Unfortunately for entrepreneurs, I'll leave it there as a conclusion, but I think it's really a balance between scalability and value proposition and monetization and profitability. And striking that balance is very difficult because the investors you have in front of you, the VCs, they only want scalability business models and profitable ones. But you as entrepreneurs, you know that you need to invest massively to get that profitability.
Well, and we're actually going to open up a question which is going to be to everyone in the panel about that in terms of that mismatch, in terms of did the VCs know that? And I think it leads into another discrepancy that we have, which is that now when we go to that 1.6% alone, Africa is 54 countries, but 59.7% of that 1.6%, lots of percentages here, but basically a large percentage of the money that does go into Africa went to good old Kenya, South Africa, Nigeria, and Egypt. And that left a lot of the least developed countries, when we were trying to do some research on how much funding goes into least developed countries who are the most impacted by climate change, I couldn't even find a statistic. So I think the question is to you, Todd, is that why? Is there a way that more VCs will try and go to the least developed countries, or is there no return? Or do we need to start looking at return and impact? Or why is no one investing there? And what are some of the thoughts that you have on that?
Yeah, thank you for that. So our name is 54 Collective. We have 54 countries in Africa, and that's the basis of why we are who we are, and that's our philosophy. And it's not our philosophy to entrepreneurs, it's not our philosophy to the market, but basically it's the basis of why we exist. Now, when you think about how your local VC is structured, they will fundraise, and then out of that, they will charge, let's say, 3 or 4, 5%, depending on the structure. Basically, they'll charge a management fee out of that. How we are structured is, from the very beginning, as we talk to people who support us to enable this in the continent, the conversation is about Africa is a risky environment. And it's not just about the capital, but the support that we give. So on top of that, as 54, we mentioned, well, with the entrepreneur, we'll give you the equity. But on top of that, we will give you concessional debt, which is, basically interest rates below inflation rate. And I think we're the first to do that, one of the few people in this market innovating on how we issue our support. On top of that, we are giving you free support, platform support. And now to picture all this, we are a 150 million fund. 40 million is just to commercial capital, that is equity. The balance of that goes to concessional debt and active support. What that means to your traditional VC, they need to raise 2.5 times their current fund to match the support that we are giving to entrepreneurs. And that's the conversation. We already have a portfolio of 78 businesses across 14 countries. And we have 40 more countries to get to. And we have to do this possibly in the next 2 years and 5 years maximum. The goal is simple. As you go out all there, and as you mentioned that we need to invest in Africa, the angle is not about commercial returns only. It's about, yes, it's a risky area, but on top of that, we're also building impact and commercial returns concurrently. And I believe 54 Collective is well pleased to take on that challenge. And we also creating a path for other fund managers to see that these are the structures that are needed in this region.
Okay, so we've had, and I'm opening this up to all the panelists, but starting with Vladimir. So obviously looking at the discrepancy of trying to build this resilient ecosystem, it's the question of how do we apply tech to Africa, because a lot of the VCs need to see that. And then there's the question of, is it that maybe investments or VC investments need to also come with, other financial instruments like debt? And I think opening this up to you, then Vladimir, is, is the investment ecosystem in Africa for Africa? And I'm opening that up to everyone else. You can add. I have my timer on, but you can add.
Thank you. I think just coming back to the previous question, so we as a fund, we've invested in all across Africa, probably, so we invested in Zimbabwe, Chad, DRC, Mali, Burkina Faso. Not many funds have done it. So coming back to the question, like, why not so many funds are investing there, is just, I think it starts from the fundamentals of the VC model. And the way classical VC model works is like you do 20 investments, 17 die, 3 survives, 2 are good, and 1 is a unicorn, something like that. So, and that's why most VCs are betting on the biggest markets in Africa, because betting on the biggest market is that's where you get the highest chances of getting a unicorn. And essentially, those markets are smaller ones. So I think essentially, and again, just from personal experience, those companies are relatively successful in those markets, like actually profitable, unlike some others. And but fundraising there, it's a nightmare. Try to fundraise somewhere like DRC or Mali when you are, like I sometimes talk to investors and we're trying to pitch and say, like, guys, just come over. The typical question, it's not like it's a request for an armored car or a satellite phone, or someone can't even get clearance to go there. So how we can fundraise there? So it's really, really complicated. I don't think that the VC capital is necessarily the right type of capital for those markets. There should be some sort of maybe private equity or SME where you can generate reasonable returns, but it's not probably a place where you will get a unicorn to back your classical VC model. Now on the resilience side, and it's a good question. I think, like, I have just enormous respect for the entrepreneurs from those markets and what they're going through. It's really tough, and they're extremely resilient. They always, and what I also love about them is entrepreneurs from those more fragile states is that they never think that there will be another VC coming and backing them. They actually thinking, how do I become independent? How do I become self-sustainable? How do I make sure I'm profitable? Well, and essentially that's why they keep operating. So we have quite a, I might say, good portfolio in those markets.
So, is that ever going to change? Or do we just carry on as is? And I can see Namara is like, oh, you got your mic back. Or did you stop?
I did.
Okay.
I was like, pass it
but anyways, so I think, and maybe I'll go down this row because everyone is like, I also want to talk. Okay, well, fine. I see my panelists.
Yeah, I think everyone, Maxime mentioned this, Toet mentioned this. Venture capital in its traditional sense was not built for a lot of the things we want it to do. In the early 1940s, when this professor in MIT wanted to invest in innovation, the idea was, how do we back innovation, highly innovative companies that have very low OPEX but really high risk, right? Now, since then, we've had maybe 1 or 2 evolutions. I think the last one was in 2002 when YC was like, oh, look, an accelerator, look, a safe. And this has been maybe the last, really big innovation in that space. We're seeing now, though, a lot of VCs tweaking their model ever so slightly to accommodate that. And I think 54 Collective is a very good example of what that would look like. At Flat 6 Labs, kind of taking the combination of the accelerator, but also the investor, but also the incubator early stage and the trainer has also been very beneficial, especially for climate tech startups. But to answer your question, no, VC was not built for the continent, and it is our job to figure out how, one, to educate and convince our LPs of the different things that we need to do to make things work, and two, to convince founders that not everyone should be raising from VC. Only 1% globally actually raise venture capital money. So for many of these industries, you require more patient capital. 10-year horizon is not enough. You require high capex, which for VC, many people will shy away from. So the questions we really need to be asking ourselves was, how do we as an ecosystem begin to influence other players in this very fragmented group of people to think about investing in climate, which is important.
Man, and as I said, there will be questions after this. I almost have a follow-on question, which I did not plan with the panel, but we'll go to Christine. Is it Creative for Africa? And, Namara has already said that, but, your thoughts?
Yeah, so my thoughts are the ecosystem has really evolved because we've seen a lot of VC activities, but because of the challenges we are experiencing, it's now a bit logic because the challenges are still here with us, and it questions now the resilience of this ecosystem. Listening to the pitches that the entrepreneurs have been pitching throughout the day and even yesterday, there's clearly a funding gap because one of the things they are asking for is CapEx support. And as Christine has highlighted, most of the VCs shy away from these startups. And so for these startups actually to commercialize and scale, they need a lot of hardware support. And now if the VCs are shying away, either giving small ticket sizes or completely avoiding them, then there's a mismatch. Yeah, and so what we need to do is diversify the funding sources. We really don't only have to focus on the VCs. We can also develop or encourage the local VCs as opposed to foreign investments. Yeah.
And I think, Maxime, earlier you said that these Seed Stars, Africa Ventures, looks at a smaller pool when you're looking at some of the investees. What was driving that? And then I'll go to you, not to finish everyone's thoughts, but a lot of them were saying, someone needs to change it. With the existing, funds under management, can someone change it now, or is it too late because the investment mandate was already done? And what does that then look like? Again, an unplanned question, but I know that I'm sure you can.
No, thanks for the second opportunity because I realized there were some things I wanted to add.
And I think, Vlad, if you have something you want to add as well, you can do that afterwards.
And Namara, thanks also for this. I'm realizing across the panel, it's actually super interesting. We have three of us are combinations of accelerators and funds, and that's actually new, and that's something that we've also been promoting, and Flat 6 Labs as well, and you guys now with the new fund, and I think that's new, and that's great for the ecosystem because that's part of the gap that we had, is how we build the continuum, and super glad to see today that in 2024 we're getting there. Not in volume, not in depth, but at least in people and in speaking opportunities. And so I think that's a great way to also convince LPs on what is needed in the continent. But to answer the question, is it too late? No, and I think the reason why we set up these new funds, these new structures, why we need to convince LPs that we need to change things, and why we take so long at doing it, is because we are doing things differently. It may not look like it, but we are. And typically we invest in 0.1% of our companies. that come to us. So I don't want to be too negative. But the reason for that is because, as I was saying, we really focus our attention. And I want to maybe give a little bit of light at the end of the tunnel. We've made 2 investments in climate, or what is today categorized as climate tech, in ag and in energy. Those companies we invested at early stage, at seed stage, and we've helped them fundraise from impact investors, from sustainable investors, through developed PPP, also with sustainability linked financing. And I think that's one of the roles that we play as VCs. As we fund more, we're closer to the entrepreneurs. We can help them more. We can help them fundraise, and so we can help them bridge that gap. Not only us individually, but collectively with the rest of the players. And on the need for other players, I think that's super important. In the rest of the world, historically, VC didn't fund the world. The capitalists of the 19th century in Europe or the US were just high net worth individuals and families and the governments. And still today, in Europe, it's only governments that are funding industrialization, or corporates. So I think we have to have that in mind. If you're a traditional business, then that's the way to go. But we as VCs, we can work to bridge the gaps. And I'll just give one number. We've been investing for 2 years on our 5 initial investments. Today we're working on over 300 million worth of new investments in those companies. So it shows how, and these companies all have CapEx intensive strategies. So it shows how we can actually come in early and support that growth and get to much greater volumes, and then tap into the global climate funds, all the global players, which can come in once the volumes are big enough.
And I think going to you, so man, there's so much that you've just said in that, in terms of VCs didn't fund the world. Now they are funding African startups, but then there was a stat someone said earlier about how many of them are failing. Or how many of them are not, getting the return that the VCs thought. And I think with 54 Collective, have you completely then changed that structure? And also the third one is you've now decided to innovate. A lot of them were saying like how we need to get some kind of technology, and you now said that you've got the fund, you've got accelerator, you've got concessional debt. Yeah, so are we just, do we need to change the model before some of the best founders are actually not, they feel like they failed, basically?
Yeah, so quick one. So to the original question, 54 countries in the continent, but we have the big 4. Now, what you're not hearing is funds, basically, they calculate the risk. So going to this big 4 is a strategic move to get the returns they are looking for. They do not have a high appetite for risk. And back to my original statement, it's because of how traditional VC models are structured in this continent. They are not built for this. They're built for other markets, but not this market. Now, what we are doing is we have the right structure, which is if you're 100% capital, basically, think of it 100%, 66% of our fund, or basically the cash we have, goes to supporting the entrepreneur, which means CapEx, you get 5% interest rate. That is good for the entrepreneur. What it allows them is to try out different models. And on top of that, you have a platform that you can lean in that can really walk you up, build up your product, work together, and make sure you're right for product market fit. And on top of it, you have equity. So you can unlock up to 250K in terms of equity. You can unlock 150K in terms of concessional debt. And if you're a female founder, you get an extra 150K concessional debt. That is 300K. In total, you can walk away with 500K from 54 Collective. And we didn't wake up and rebrand. This is 6 years of being in this region, in this market. We were Founders Factory Africa. We learned, we started as an accelerator, we became an incubator, but now we are a VC model with the right model for this continent. And that's why we are in 14 countries and we're still expanding, because the structures that we have and how we are set up is for Africa. And as we always say, we are building without boundaries. And that's the message to
And I think it's so encouraging. And I was the MC last time, so when the MC stands there, it means, but it can't be time because we started late. A bit late. Okay, I'm kidding. I'm trying to make sure there's time for questions. This is me trying to fight for everyone. But I think what's encouraging about this entire panel is that everyone has a different approach, but by doing that, you start to reach the 1.4 billion people in Africa. So it's kind of, everyone's got, someone in this room may be the 0.1%, and then someone else might be part of the 1.6%. So maybe let me just ask, how much more time do I have? Wait, let's just do this. Does anyone have a question? Does anyone have a question? We've got 1, 2, how many questions?
So
3, we'll just take 3.
So we're going to have investors pitching. You really want to watch them pitch. Like I cannot wait. So do we want to do questions now, or do we want to watch them pitch first? What do you want to do? You want to watch them pitch?
Let's do this. Can I do this? Can I do something? Are there any startups in the room who have a question for the investors?
Right. There's a
because
time.
I want you, any startups, are there any startups who have
Because
a
when they
pitch,
there are going to be questions to them while they're on stage. Very much the same way judges ask all of you suffering entrepreneurs questions. We are going to ask them questions on stage. So would you like us to do that? That way we can save on time?
I think let's maybe just see over some questions.
So you want to do 1 or 2 questions before we do that?
I think I'd love to just do 3, and then everyone who is live stream, you just have to get in the room next year.
That's a good one. Okay,
at least you're able to see it. But
so we do 3 questions at once, everyone answers, and then we're good?
Yeah, and then that's okay, and then you guys
can
all
we have one
decide the
there.
answers.
Did we have somebody else with a question on this side? Yes, we have one at the back and one at the back.
I did
You want to go in first?
All right, thank you. Kevin Kwasa here. And I had a question, I think it's for the entire panel, and it's more exploratory. I think we've heard a lot about Africa being a risky environment, and there is that perception around there. And my question is, I'm a lawyer and getting into legal space, especially with startups, and we want to figure out is there somewhere you feel that legal can support in helping that situation get better and creating a better perception for Africa, especially since we're saying Nairobi is a sort of hub and spoke for that sort of thing, and any lessons learned.
All right, thank you. The second question, I think there was a second question somewhere.
Hi, thank you so much
so
for
basically the lawyers want to be in the room, and that's an interesting one, because they're never in the rooms for these. Second question.
Yeah, thank you so much for the feedback. I think it was really interesting and insightful. Just a quick question for all the panelists. Because I know there's been a low intake in terms of VCs investing in social enterprises as well as non-profit organizations. And I just want to find out from any of the VCs, are they currently investing in any social enterprises or NGOs currently on their portfolio? Thank you.
All right, I think there was a third question, and now I know next time it's not one question, one comment, because now it was like a question to all the panelists. So you guys will decide. Third question, please.
Thank you. It's a question to the panelists, particularly, let me pick one, Namara, since she spoke about it. What's the approach to helping founders get concessionary capital from VCs? And I think that's something climate tech in particular requires, given that you mentioned patient capital, and a lot of the climate tech participants are also social enterprises in a way. So what's the best approach for a VC to help a founder get patient capital?
Okay, so we've got those 3. So who's taking the risk question? So is there a reason why there's still a perception that Africa is risky when there might be a way to just fix that perception so that we don't keep on hearing that at every single year that Africa is a risk? Then the second question was, but let's start with that one. Thank you for the extra time.
Hello? Yeah, so on the risks, why Africa presents itself as being very risky, we have several factors, like let's say the climate risk. We are very vulnerable to climate change. And I was actually having a conversation with an entrepreneur the other day, and they are based in Kenya, and they were telling me they have not sold since March because they are in the water purification industry. and it's been cold since March, and so they have not been able to make any sales. So that's a climate risk that is suppressing their sales. And then we also witness a lot of regulatory risks because policies keep changing, and also they are quite unfavorable for the ecosystem. And so that is one of the areas, as a legal person, you can come in to help in engaging the government in terms of making the policies more favorable for the ecosystem.
All right, thank you. Who wants to take the social enterprise? Is anyone looking at investing in social enterprise? And then there was the second question. I don't know if anyone took notes.
No, I don't want to take away from that, but I just wanted to add one thing, and I'm going to be a bit like even more positive. I think we need to change the narrative. Africa is not more risky in venture than the rest of the world, and I think it's worth saying because we need to stop thinking and saying that. In the rest of the world, at seed stage, you invest in companies that have nothing. All right, in Africa, we're investing in companies that have a lot. So it's not, and there are plenty of exits in Africa, a lot more than the 20 years of private equity. So anyone saying that is basing it off of private equity and erroneous information. So I'm really convinced about that, and I think we need to tell it to ourselves and be convinced about it because it's true. And I think there are a lot of opportunities here. You guys are doing a great job as entrepreneurs. You're monetizing super early. You're proving a market. Customers are paying for your services very early on. You're addressing real issues. So I just thought it was worth mentioning.
Thank you for having just like grabbed the mic and added that, because is it seen as a risk just because you don't understand it? And that maybe is something that we need to, if like someone who said that question, maybe next time you're in a session and someone says Africa's a risk, maybe we do need to challenge that more and say, so what makes it a risk? And so, okay, I really need to, otherwise I'll be fired forever. So I think we'll have that and then we'll do the last closing, which is just they have just like one question they're going to answer. Namara's mic.
I'll quickly take the first one. On the legal side, I think especially for frontier markets it could be helpful as long as you can convince investors that their money is safe and that the legal system works and there is a court and like everything operates well. I think it will definitely help to distribute the capital in Africa more evenly. At the same time, I must say sometimes we are seeing deals like seed stage deals with 500 pages of shareholders agreement. I don't think it's helpful and probably won't make this investment more sustainable.
Okay, so we're gonna start closing remarks with you. No, Namara, it's closing remarks. No, you can put it in your closing remarks. Otherwise, as I said, I will. Where's Christoph? I'll be fine. So what we did for closing remarks is there's only one question, and the question is, what is the one thing, so based on all of this, I'm just going to do the last bit of the question, is what will the one thing be that needs to happen in our investment ecosystem so that we can create African-founded climate tech unicorns by 2030? So what is that one thing?
Can I add to that question a little bit? That's a really good question. Can I add to it? Just a bit.
You want to add to it? You're the one who said you wanted to stop my panel.
Sorry, mine's maybe looking at it from more of the negative perspective. I think Maxime mentioned that you only invest in 0.1% of businesses that approach you. I think maybe across the board, 99% is fair in terms of people seeking venture capital or even private equity that fail to secure it. What do each of you think is the single biggest reason why venture capital or even early stage businesses seeking private equity fail to secure that capital in sub-Saharan Africa?
Okay, perfect. So I'm going to then reframe the question with that, which is that 99% of the applications fail to access VC capital. And so what is the one thing that they need to do differently so that we can see more African-founded climate tech startups? We want to see more of those. So what's that one thing? Does that merge the question together on the spot? Okay, so starting with you, Vlad. And then you can kind of slot in the social, or you can find her. Please go. Yeah, you'll find her afterwards at lunch. Okay.
So I think if we talk about climate, there are two parts of the question. So one is political, so how much capital is available in the world for climate depends on some political outcomes as well. But what we can do, I think, to create more climate unicorns, if you want, we just need to show good returns and bring more capital to Africa. That's it.
Yeah, thank you. Namara, I'm sure you can find it during lunch.
Yeah, I'll find you and
Because that's an entire another panel, which is great. And maybe that will get to something in terms of that. So the one thing, what is the one thing? We'll look at it next year. If we did
Very much everything he said. We need to show returns, but the second thing is just diverse capital. We need to stop circling around this VC block and start to think how government participates, corporate participate, and everyone else.
Okay, that's awesome. One thing from your side.
Yes, coordinated collaboration. Everyone has a role to play, be it government, the private investors, the development organizations, and even the startup themselves. Everyone has a role to play.
Okay, awesome. Thank you. Maxime, one thing?
I'll actually just back Namara on this. I think, having corporates, having public entities, having different types of investors, that's the only way.
All right, thank you. And so with the literal closing remark of all the panels for this Nairobi Summit, what is that one thing?
For me, it's basically what Namara mentioned, but getting more into, we need different sources of capital. So away from your traditional LPs to more of local LPs, looking at pensions, coming into the space and catalyzing the ecosystem. If they do that, they unlock the potential of the continent.
Awesome, thank you. And thank you to my panelists. Thank you to the moderator. Wait, I want to close with just saying this. So with the competing priorities that we do have as Africa, and as a climate technical advisor and engineer, we're often asked if we can afford to invest in climate tech startups. But climate change is an equalizer. 8.5 billion people will be impacted. So my response to all investors is, can we afford not to invest in climate tech startups?